Oh, happy Friday. We are back for another episode of the Tech Behind FinTech. Always excited to be here. Have a special guest, returning guest, Manny V. He's the co-founder of Metallism. It's a digital assets research company. Welcome back to the show, Manny. How are you doing today?
Oh, man, thanks for having me, man. I'm feeling great. How you doing?
You're doing wonderful. Oh, by the way, just gotta do some housekeeping things. We gotta get all our channels in sync. So we're streaming live from Facebook, LinkedIn, YouTube, Twitch, and then we're just going to get this Instagram feed going,
Okay.
and then we will kick it off right now. Let's do it. Hold up, just doing it. 1 second, guys. Cool. We are live now on Instagram as well. Hold up. Let me paste this. Do this. Housekeeping is real. All right. Listen. All right, so we're cool. We're live there. Got that going. So today we're going to talk about what happened to FTX. Obviously, huge in the news. And we are going to dive into it. Before we dive into it, though, today's a special day. It's my man's birthday. Happy birthday to you.
Thank you, sir.
So thank you for being here on your birthday. I love the dedication to your craft.
Hey, man, there's no days off here. That's one
I
thing about the
love it.
crypto
I love
market.
it.
The crypto market doesn't rest. It's a 24/7 operation in infinitude, right? It's never going to. It's perpetual. And a lot of the conversations I've been having about it are off peak, first thing in the morning, last thing at night conversations. And to me, it's important to educate people. So when you told me you wanted me to come back, man, I didn't even hesitate. I'm there.
Oh, I actually love it, and I really appreciate you spending your birthday, and I appreciate your attitude on crypto. So, to the audience, we are the Tech Behind FinTech. You come, we talk about the technology that powers the money. Usually on our show, we cover the news of the week, and then we go into the show. But FTX has dominated the news cycle because of their far-reaching, not only in the crypto and blockchain space, but they also have far-reaching implications outside of crypto on publicly traded companies like Robinhood and so forth. So what I want to do today is we're just gonna dive right in. Let's do a last week. If you joined us, we as part of our news section, we did a timeline of FTX from when they started in 2019 to what's going on now. In the week that has passed, so much has transpired in terms of just I don't know another word for it. Literally nefarious dealings by the CEO. Some have related it to a Ponzi scheme. So really interesting stuff. We have people that joined from Instagram. Thank you very much for joining. So if you're on Instagram, we pasted our link, Tech Behind FinTech. You'll be able to see both Manny, our guest, and also some slides that we're going to pin up. If you go to our website, you can view it directly from there as well. All right, Manny, let's start with the recap, and then we just
Okay.
we dive right in. So, and also, as we always say, we love your comments, love your questions. If you have some insight and want to add in, feel free to comment. If you have lost actually some money or some crypto and you want to talk about that, jump it in the comments and we could address it and talk about it. So that's where we're
Absolutely.
at. But brief recap. So to sum over last week's discussion, and we'll start taking it from there. FTX started in 2019. At the time it started, Binance, which is another exchange, their CEO, CZ, he bought 20% of the exchange for 100
And
mil.
real quick, can we pause there real quick? I just want to make sure
Yeah,
I
let's do
stress the
it.
point that Binance is the number one exchange in the world. It's the number one centralized exchange for crypto in the world. Like there's no one's even close second anymore because the FTX is falling. But go ahead. I'm gonna add a little more.
When you say that, I have a question about that. How would
Sure.
you rate Coinbase, or would Coinbase be in that conversation?
Oh man. So Coinbase is definitely in that conversation,
Yeah.
right? I have my own reservations about Coinbase as a centralized exchange because of some of the things that they've how can I say this gracefully? They have been easily swayed to change their offerings through to some political pressure, but I also feel like Binance is working with regulators a way that I think Coinbase can learn from, because Binance, I'm not gonna say they take on more risk, but I think they do a lot more for their users than Coinbase. And I think that's because Binance has an approach that's a little bit more geared toward strategic development of learning blockchain and trading and things like that, because they support a lot of other projects that may or may not be, they're cutting edge projects. Some of them may not be good. However, Binance encourages people to use crypto and to the full extent, right? And they have a smart chain on the side of their traditional blockchain that enables people, the BSC, the Binance Smart Chain, to take advantage of, dabbling into crypto and making their own technologies, making their own dApps, right? Binance has a lot more to offer than just buying and selling crypto. So that's why they're similar, because they're centralized exchanges. But what Binance means to the space versus what a Coinbase means to the space, you can't even compare it.
Interesting. And that can actually be a whole nother episode to dive deep, because so many questions I have around that. And I would think, maybe is Coinbase safer because it's a publicly traded company, so you have a lot more regulation oversight that we're going to see in FTX that just was totally ignored. Just in general, when you're a public traded company, I mean, there's certain things you just cannot ignore. I mean, it's open books. I'm not saying you can't. I mean, look at Enron, for instance, right?
But I mean, just to your point, real quick, I'm not saying that people, of course, I don't give financial advice. I'm not a financial advisor, but I will say, observe what people do in traditional finance, like with stocks. A lot of companies don't have good books. A lot of companies manipulate the price. A lot of companies can buy back their stock and shoot a price up whenever they want to, right? And crypto projects get all the scrutiny. Meanwhile, I mean, they didn't invent anything new in crypto, right? So I would just say that's one thing that I think a lot of people kind of misunderstand when it comes down to what is a safe investment. When you look at companies that have a big brand, and because they're cornering the market a certain way, you think that all the investment vehicles that they have are safe, and that's not the case. Somebody can wake up one day, the board of directors say, you know what, we're going to buy back all this stock, man, and price of the stock goes up 3x. Then they dilute the stock one day. Does that look normal? No. Really, you would equate that to a rug pull because of the FOMO of people buying at the top price and then holding when shareholders sell, right? That happens all the time with stocks, right? And so people look at rug pulls thinking that it's a new thing with crypto. No, they're just redoing it in a different industry. Literally the same playbook.
No, I mean, it's a good point that you bring up. All right, so I'm back to the recap, right? So, starting in 2019, Binance took 20%, bought 20% of the exchange for 100 mil at the time. Friction started to happen when FTX applied for a license in 2021 in Gibraltar. As part of the license, all major shareholders had to be disclosed. When FTX went back to Binance to get that information from CZ, their CEO, major stalling. 2 months later, with Binance in major stalling. So we're going to call Bankman-Fried. We're just going to say SBF as its moniker. It's just easier to say throughout this whole thing. So let's say SBF got tired of waiting. He brought back CZ's stake in FTX for about $2 billion. He paid in FTX's own coin.
That's
FTT.
key. That's key right there.
Key to the whole point. So 2 months later, FTX gets the license in Gibraltar. This year, May, June 2022, SBF's trading firm, Alameda Research, suffered a series of losses from deals seeking to prop up Alameda, which held almost $15 billion in assets. SBF transferred at least $4 billion in FTX funds secured by assets including FTT and shares and trading platform from Robinhood. He included in shares. So Alameda had disclosed a 7.6 share in Robinhood that May. Let's move on to the next. SBF did not tell other FTX executives about the move to prop up Alameda. So
let's pause real quick though.
Yeah, of course.
SBF owned 90% of Alameda. Let's keep going though. Alameda.
All right. So then on November 2nd, CoinDesk details a leaked balance sheet that allegedly showed that much of Alameda's $14.6 billion in assets were held in FTT. The Binance CEO, CZ, he said that he'll sell his entire share and token of FTT that was worth $580 million due to recent revelations. This all happened in a matter of what? I would say within the last 2 weeks, right?
So yeah, that was 4 days apart, like 3 or 4 days apart between the CoinDesk report and when CZ made that post, that tweet. Yep.
So upon that tweet, FTT's token price collapsed 80% over the next 2 days. And different people started to basically bail from the exchange, take their money out. FTX users rushed to withdraw $6 billion in crypto tokens from FTX in just 72 hours. In a shocking change of events, SBF signed a non-binding letter of intent for Binance to buy FTX's non-US assets. So they were going to basically sell FTX to Binance. On Wednesday, November 9th, the deal falls through. Issues are beyond our control and ability to help, said Binance. FTX is scrambling now to raise $9.4 billion from investors and rivals. November 9th, the crypto market responded to the news with investor sentiment turning fearful. Bitcoin price dropped down to as low of 15K. These are all just things that happen. Sequoia Capital marks down their entire $214 million stake in FTX to zero. Japan's financial regulator requests FTX Japan halt operation. This is last week. So since then, more has happened.
Yes.
So
since your show last Friday, they went in chapter 11, bankruptcy. Throughout this bankruptcy proceedings, a lot of other liquidations happened. But also, there are a lot of conversations that are now being revealed between what SBF was doing with his trusted circle of people, his legal team as well, and a lot of things are starting to come to light. I'm going to say allegedly a lot here because I don't want to say that they haven't been tried yet, right? But allegedly, a lot of people are looking at this 600 million that was taken from wallets. So the hack was not. I don't think we discussed that on this timeline here, but basically 600 million in assets were drained from these wallets. Now, the way the hack happened, it definitely it looks like it was probably somebody that knew something from the inside, honestly. And at this point, you really can't put it past this group of people. Unfortunately, a lot of things that have been said, a lot of transcripts, a lot of dialogue, a lot of interviews, even like SBF was pretty arrogant sometimes, just to call it what it is, man. Like he was probably running what you would equate to allegedly a Ponzi scheme, right? And his attitude toward that and everything else in the response to this stuff, it was stuff he's doing on Twitter right now with just, posting one letter and then removing a tweet, removing incriminating looking tweets. Why wouldn't they have somebody from the inside drain the rest of this stuff? Unfortunately, it looks really bad. The timing looks really bad that this hack happened. And now, of course, the result is that hack is now the 36th or the 35th largest holder of ETH in the world, right? They drained a lot of the DAI stablecoin out of that ecosystem and then swapped it out for Ethereum using several decentralized exchanges, right? So then the balance sheet was posted on November 10th, right, showing $9 billion in liabilities and just 900 liquid, 900 in assets, including liquid. So these guys were, man, I mean, they couldn't even begin. I mean, it's a hole of at least $8 billion, and that's right now, right? And of course, FTX also made a claim during the same timeline that people cannot withdraw their assets because of the Bahamian government. They actually lied. That was not the case because the Bahamian government came out and said, no, we did not tell you that. But then, of course, after all these things transpired, I believe on the 9th or the 10th or something like that last week, then they were told to go ahead and stop letting people withdraw, right? So they lied on the government. Of course, there's other things that they're going to be investigated for, but that's one of them that just does not help, man. It's a very ugly bruise on their face to even, lie when you don't have to. So there's a lot of other things that's trickling down now, coming out that's really looking ugly for what FTX has done here. The relationships with his employees, what was happening behind the scenes, where employees at FTX were encouraged to not only get paid their weekly salary or their bi-weekly salary in FTX tokens, they were also encouraged to invest their 401ks with FTX tokens as well. So you can imagine people that work there virtually did it for free now. And that is a daunting. I mean, that's crazy to me,
It's it's a lot to unpack, right? I
Right.
mean, we didn't even get into the contagion aspect in which all of the other firms, I mean, and I think that's one of the things to understand how massive FTX is. It's a picture I want to show real quick. And this picture, and what I'll do, oh no, so a LinkedIn user says, let me post something from a LinkedIn user. Sounds like Enron all over again. If you don't mind, who am I speaking with? So I can refer to you by name. All I see is LinkedIn user.
Yeah, so it's interesting, right? And we've been talking within metallism about a lot about this, of course, but Enron definitely, I mean, this is definitely, I think it's probably worse than Enron a little bit in some ways, because it really took a lot of people's lives, livelihoods, for granted, and a lot of people lost a lot of money that weren't investing in houses, right? A lot of people that got the short, and I'm not Enron, but yeah, so and that's no, so exactly. No, so he's right on that respect, or they are right in that respect that Enron did do similar ways, but it's a lot of comparisons that we can compare this to. And it's almost like the tulip mania or a Bernie Madoff situation too. And I think this situation is closer to one of those versus Enron though. But yeah, it's can't dismiss it. Oh, okay. What's up, Rodney? So Rodney's one of the researchers at Metallism. He's a
Hey,
longtime
Rodney.
friend of mine. He's
Thanks for,
also
thanks for
a
checking in.
cybersecurity engineer. A good friend of mine, real sharp guy, man. Yeah, one of my closest friends, man. He's a good dude, and he's diligent. He stays on top of the stuff like we do.
Let's get to it. So we
Yeah,
have a couple
well,
of
this is
so
this is interesting.
so from Almeida Research, their early stage DeFi activities, quite a couple of few companies listed. I'm trying to see any one of these that you're more familiar with in terms of
You
the
say,
early stage DeFi activities.
so I'm not really a big DeFi, especially in the early days, guy. At the end of the day, some of these things, I don't know, what they are, honestly, because a lot of these things are probably, yield farms, liquidity pools, that were used for projects at some point or another. No, I mean, of course, I recognize some of them, of course, like Consensus is a big one. I believe they're also joining with
Okay,
MetaMask now.
right there.
Balancer is one of the biggest platforms. Of course, you're looking at a few other ones that Oxygen I've heard of, Convergence, um, Opium. I've seen the name before, but no, I'm not really a big old school DeFi guy, man. A lot of that stuff to me was a little bit before my time as far as interest when it comes down to DeFi.
Well, a
And
couple other
unfortunately,
screenshots. They
yeah,
have obviously we talked about this earlier. They had a stake in Robinhood.
yes,
So other contagion right now, BlockFi,
yes,
Genesis,
yes.
they have also started to limit withdrawals. Let me get the full
Yeah,
list
so
of
why you pulling that list up? Let me just say, so yes, there's a lot of big ones that are going to suffer, right? And if you look at what happened earlier this year with Terra Luna and the collapse of the UST stablecoin when it got depegged, there were a lot of big players, a lot of wallets. Actually not a lot. It was actually 7 wallets that really contributed to a lot of this stuff. Unfortunately, it looks like a lot of these same companies that now are affected by FTX, not a lot, but it was only 7. So far, 3 of them are drastically affected, right? So Voyager and Celsius are 2 of the bigger ones, right? But Genesis, BlockFi, and of course Gemini, which is pretty much all ran by the Bigger Boss twins, they're going to suffer pretty big. Unfortunately, there's other ones, Sequoia Capital, uh, Crypto.com had a few. I think they had only like 10 million, so they're not that bad. But even then, that's 10 million, still 10 million. Wintermute, there's a few other ones that I've never really heard of. Of course, CoinShares is another one. A lot of exposure here, man. And what's interesting is you look at how a lot of these exchanges, a lot of these projects in crypto support each other, which is needed, absolutely. But the use of a token that has no value ubiquitously, right, only can be valuable within one exchange, needs to be questioned. Especially if you're looking at propping it up and using it to represent assets under management off of a value of a token that really doesn't have value outside of its own ecosystem. So, and I think this is not going to be the last time we see something like this, right? And a lot of people this week really have been asking me about Tether, the stablecoin, right? Because of the audits from the 2016 and 2017 books, a lot of people saying that their assets are not really backed one for one with asset, you know, outside of either fiat or other assets that are not as hard. And people question, you know, whether or not, if people wanted to analyze if Tether is going to be, I say next. I don't want to say that. I want to say it could be some situations down the line where if there's some insolvency behind projects, you know, it's going to happen again. So, yeah, I don't want to say too much about that, but I just want to put it out there that, you know, this is going to be other times that this is going to happen.
So here's some notes that we have from Gemini. Gemini caught up in the FTX collapse and paused new loan origination and redemptions. They have 175 million in assets locked in the failed exchange. BlockFi, they were entangled with FTX. They're now planning to lay off some of its workers, while they also prepare for Chapter 11. It's Chapter 11. Genesis halted all withdrawals. It paused on its crypto lending business, citing extreme market dislocation caused by the FTX collapse. So this is what we refer to as contagion. I mean, you just start seeing that other places, other firms that this event is impacting with the FTX collapse. I mean, let's understand, right? FTX, as we're talking about, they were major in the crypto market in terms of working with regulators and donating to political campaigns, in terms of propping up other crypto firms and so forth. So it's a wide web of entanglements. Every time I use the word entanglements, my mind goes somewhere. But wide web, literally a wide web. And it's just ever reaching. I mean, literally, if we think about even the price of Bitcoin dropping down to 15K at the time, right? I mean, where were we? It was a time Bitcoin was 66,000. You know, so these lows we haven't seen in quite some time. Now, no, we're not predicting on currents, on prices and stuff like that. I mean, what goes up comes down and so forth and so forth. We've seen these cycles, but it's just been, I just think the market, I mean, would you agree the market has just been taking hit after hit? You mentioned Luna. We talked about that earlier on. Matter of fact, the last time you were on the show, I was reading it. We were saying, wow, I think it was like the crypto market hasn't seen lows like this since a certain time. Where do we go from here? And it sounds like we're having the same conversation right now. Market cap for crypto is about what, 800 mil, under 1 trillion.
800 billion. Yeah.
800 billion.
So check this out, right? So this is the thing, right? This is one thing I think people also misunderstand, because just like everything else that happened during the pandemic, the knowledge of the awareness of crypto just really got exacerbated. People started looking at it like, oh man, crypto, right? Like this is the first time crypto's going through a cycle, and it's a third cycle, right? Third of a 4-year cycle. So this time of the cycle, which every 4 years is pretty much like mathematical, like you could down to the day sometimes, the behavior of the crypto markets, because it's based off the having a Bitcoin. The having a Bitcoin is when people that mine Bitcoin get half the reward that they normally would get throughout the whole ecosystem. So when that happens, that creates a price shock, because miners are going to get less. That means there's more scarcity, right? So people will sell their Bitcoin for altcoins, right? After they make a profit in Bitcoin. And of course, once they buy altcoins, because of that surge of buying power, then the people that are smart money sell their altcoins to go back into Bitcoin. And guess what? Bitcoin's going to go back down to the highs of the last cycle, and then stick around there for a year and some change, and then bounce back up. That's what normally happens. Now, because of the news cycles being more aggressive, people being home and doing more research, people starting to invest. You got a lot of the game stock effects, the gamification of investments, and people start looking at crypto like, oh man, this is one of the things. Like, no, it's not a traditional market. No, it's not working the way your typical Wall Street stock goes. It doesn't work that way. But the news cycles are now covering crypto, so it looks like, oh, this is so bad. Oh, this is so bad. But even if nothing happened, say Luna didn't happen, say this era of the FTX stuff didn't happen, crypto will still be hitting new lows now, because it's what it does.
I mean, it's interesting you say that. And I mean, we definitely see the cycles over the last few years, especially if you've been in it. I mean, some people are early, some people have been in it since 2012. Some people got in 2017, 18. Some people just got in during the
2009,
pandemic.
some people, yeah.
I mean, and bless their hearts, right? Because they should be really, really good, just regardless of whatever the price is then. But what we're seeing though is massive fraud on a whole other level. So these new companies come out, and it sounds good. Look, and even in this case, right? We had celebrities hyping FTX up. I remember the commercials, the Larry David commercial. He was like, I don't know about this FTX thing. And they showed him in different points in time, different characters. Tom Brady, his wife, well, his ex-wife now, Shaquille, Steph, and they're all actually currently being sued in a class action suit for promoting FTX. So,
Yeah, I'm not cool with that, but I understand why.
Yeah, I mean, look, it's something that I learned when swimming, right? If you save someone who's drowning, they're gonna try to grab any part of you, and sometimes, right, they end up actually killing the person trying to save them. So, look, you're in the middle of an ocean, you just lost everything. You're gonna try to attach any big name to this suit because of the amount of money that was lost. So I mean, I get why. Who knows if it's gonna work, right? Look, these guys endorsed it. They never it doesn't seem like they actively tried to scam. FTX, you had people in literally politicians behind it. It was a pretty big deal. So who knows if the class action suit is going to work? But the whole point is, how can users or end users be safe moving forward if you still want to be part of the crypto market?
Well, number one, and we always preach this. I think everybody preaches this. We have a phrase: "It's not your keys, not your crypto." The number one thing you should do if you're going to get into crypto is get a hardware wallet, cold storage. It looks like a USB drive, right? So Ledger and Treasure are the bigger. Oh, let me try to see if I can find one. I got one around here. Somebody to show, right? This thing right here. This right here it looks like a USB drive, right? End of the day, when you buy crypto off an exchange, whether it's a centralized exchange or a decentralized exchange, you need to send it to your wallet. So some of the tokens that are actually worth something, like Ethereum, like Bitcoin, Polkadot, Polygon, there's so many great projects out there. Most of them are supported by hardware wallet companies. You transfer your stuff into your wallet. So if something were to happen, like an insolvent exchange go down and suspends withdrawals, guess what? You have nothing to withdraw. So the biggest takeaway to be safe is to use hardware wallets. There are some web browser wallets. There's a couple things like Trust Wallet out there. Binance Smart Chain has a wallet. Of course, you got your MetaMaskers, and you got pretty much a browser extensions that can be used as wallets. Those are safer than exchanges because ultimately, there's going to be a lot less liability as far as a hardware wallet. Telling you can't withdraw because it's insolvent. That's not, it's not an exchange. So it's safer, but it's not the best because it's still on the internet, right? It's still on a computer, right? This right here, I would have to have this plugged in. Right? Somebody have to know my PIN code and or my seed phrase and have to come get this thing, and I got a couple things in my house that will probably prevent you from getting this, right? But ultimately, that's the safest way to do it, sir.
Yeah, I mean, I was going to talk about that, right? So literally, there have been cases in which people have been stuck up for their crypto.
Oh, yeah.
We talked about it, a couple of cycles ago, earlier on, where cases in the UK in which someone goes out and in one story, they were into some activities that were illegal. They were trying to purchase drugs or whatever. But the guy, the people essentially cornered the gentleman, made him go in his phone and essentially transfer his crypto to them by threat of extreme violence. Right. There was another case in which someone was he was a multimillionaire traveling. I don't want to miss the story, but I remember it was Spain. They basically did a home invasion, held him until he transferred some crypto to them. So that's a fear of something of the hardware wallets and things of that nature is the threat of if someone knows you have crypto, the threat of physical violence,
Right.
physically. I mean, it's the same thing that happened. I mean, we know cases back in the days in which you would get home invaded and they'll escort you to the bank to make withdrawals or take your cards. But I think that's a
Yeah, so
common.
the next level of safety, which really I think is probably the primary level, is your privacy, right? I know I'm taking a risk talking about this stuff publicly, right? However, the average investor, unless you're trying to educate somebody, no one should be telling anybody you have crypto. You should not go around telling people what your investments are. You should not be going around telling people what your assets are. You shouldn't really tell people your favorite color. Let's be real, man. If I knew enough about you and I knew you had an account somewhere, I could probably guess your security questions because I know you. The amount of
Yeah,
information that you let people know, it makes you a liability. So me telling people, hey man, get a hardware wallet. Yeah, somebody would have come in and take mine. Okay. I mean, at the end of the day, I got my seed phrase. They don't. So guess what? I'll just get another ledger, and then this is gonna be inoperable, right? So the thing is, I just want to make sure I'm very clear. Do not tell people that you're investing in crypto if they don't need to know. And guess who needs to know what you're invested in? Only people that share money with you. That's it. Nobody else.
So, question on that. Maybe you can help people out with that.
Yeah.
I think I want to drill into that point for people who are not as familiar with hardware wallets. So you just mentioned you get a hardware wallet, you store your information on. You mentioned the C phrase now. Something happens, I don't know, hypothetically, the house is on fire, the hardware wallet is destroyed. How can a person now, they're like, oh no, all my assets are gone. How can they retrieve that?
Yeah. So that's the beauty of blockchain, right? So blockchain indefinitely holds every transaction. So your hardware wallet is linked to a service that the blockchain that the hardware wallet company has stored for you, right? The mathematical equation behind your wallet, your address, and the seed phrase is making sure that if somebody knows your seed phrase, they can always retrieve all the assets in that wallet. So these are all things that are all native to the blockchain that are pulled in from companies that can interpret what's on a blockchain and say, oh yes, this wallet address has that on the Ethereum blockchain. This wallet address has that on the BTC blockchain. And the seed phrase is how they make sure that somebody can recover this stuff in case they do lose access to the original hardware wallet. So it's done by the companies that actually manage them.
I have a question about that, right?
Yeah.
Hypothetically now, you have your hardware wallet. Someone now gets another hardware wallet. Somehow they get your seed phrase. Can they now transfer the funds in your wallet to their wallet?
They can do whatever the hell they want. Actually, it's their wallet. Actually, it's both of your wallets because both of you have the seed phrase. Once again, why do they know you have
a race to whoever can get the money out faster?
Yes.
Wow.
So this is the challenge. You're owning your own assets. That means you're Bank of America now. You're your own bank. You're Truist now, right? You're holding your custody of your assets. That's the challenge with this. Now you're your own bank. Well, what do you do in your own bank? Do you put a security guard up? Do you let people know how much you have in your bank? Do you advertise what your assets are? No, you wouldn't do that if you own the bank. So if you have a hardware wallet, you treat it like you own a bank. What do? You don't tell nobody. You safeguard it. You might want to actually give half your seed phrase to a good friend and half the seed phrase to a cousin. So guess what? Right now, something would have happened where you wrote it down and it got burned in a house fire. It's some level of somebody knowing half of your stuff to help you out, and then someone else knowing the other half, not somebody knowing 100% of all your seed phrase. So there's a lot of ways you can do to mitigate some of these losses, but the biggest takeaway is you are your own bank and you have to act accordingly.
I mean, it's interesting, right? Because just in general, security background, obviously, is always kind of skeptical about hardware wallets just because of the responsibility it takes and the idea that
Absolutely.
through the actions of literally brute force, and I'm not talking about brute force like a denial of service attack. I'm talking about literally brute force beat you over the head and take your stuff. Was always like, wow, if someone has a million in crypto on a hardware wallet, they're responsible, that makes them a target, right? Because listen, I know from personal stuff, our backgrounds, we love hip hop and all that. You're walking around with a $500,000 worth of jewelry on you, right? You're a target, right? You're just a target. I mean, people see it. Some people look at it like that's potential food. So now you take the same thing with a hardware wallet, like you said, right? If you advertised it for some strange reason, you had all these assets in the hardware wallet. That means everyone knows, oh, you're sitting on $1 million or $1 million worth of crypto in your possession. That makes you a target. But now, after the collapse, I mean, I think this year was unprecedented in crypto. And when I say unprecedented, meaning this is the first time we've seen, and correct me if I'm wrong, exchanges actually limit withdrawals and say you can't withdraw. No one even thought that was even a possibility prior to 2022, right? Then, Voyager did it after Luna crashed.
It's happened before. Yeah, so
Talk to me, educate me on that. I don't. It doesn't seem as it seems like it's happening every other day now in 2022. When did it happen before?
well, the reason why is because that's what's trending in the news, right? That's the issue here, right? Let's really talk about, for a minute, right? What people use as gauge of information, and how they do not question what's being presented to them hurts them and actually makes us be on the wrong side of money often, right? So for sure that there have been exchanges that aren't around anymore, right? Banks that aren't around anymore, hedge funds that aren't around anymore. This year is like, oh man, crypto shut down. No, man, things were going down in 2020. Guess what? It was insolvent cryptocurrency exchanges in the last bear market. Like, I don't have a number, but if I had to look back and say how many crypto exchanges failed in 2015, it'd be more than one, because of mishandled funds, over leveraged plays, people doing things like putting all their money in DeFi, and then when all their users want to take things out, they have problems because they landed it out on a DeFi platform. They can't get it out fast enough, and they become insolvent due to the demand, right? That happens all the time. Now, I don't have names listed, but a few failed in 2021, right? And it wasn't because of anything that happened in the market. It was a whole bear market. I mean, it was a whole bull market last year. Last year was great for crypto. And still, some exchanges were insolvent because of how they chose to handle their funds and assets under management.
I mean, great points. And I don't, like I said, I don't have that information in front of me, but it, definitely, as I said it, and then you mentioned it, yes, what was it? What was one, back in the days, it starts with an L, locks, something, they locked up their currency. It escapes me right now. Mount Gox.
Yeah.
Yeah, so yeah. Now, as I said, I didn't thought about that. Yeah, they locked up their stuff. So yeah, so the takeaway, big takeaway right now is hardware wallets. That's a potential solution. Obviously, it's looking like exchanges, and definitely ones that offer massive interest returns, like Celsius, for instance. They're going through a bankruptcy. Locked withdrawals. All these different things. You have to be skeptical now. I mean, we've seen cases where some people lost their entire life savings within this year, just because they thought, okay, I have this crypto, I'm going to keep it for the long term, and I'm going to store it here, and now they lost out with FTX and everything being the latest.
Right. No, real quick, I do want to correct myself. So zero exchanges failed in 2015. Zero failed in 2016. One failed in 2014. One failed in 2017. 23 exchanges failed in 2018, bro.
23.
81 failed in 2019.
Wow.
95 exchanges failed in 2020. 94 exchanges failed in 2021. You see my point.
What's the number in 2022? And the year's not even up yet.
21, bro. 21.
21 so far.
So think about it. What I'm just saying here, right? What I just said here. During the bull market, more exchanges failed because why?
Yeah,
People like, oh man, I'm gonna put money in this yield farming. I'm gonna put money in this liquidity pool. I'm gonna do a DeFi play with all my users' all my users' deposits. And that's another issue with FTX, is that they took the users' deposits and allow Alameda Research to make plays with it in exchange for the FTX token gains. So your BTC, your Ethereum that was on FTX was used by Alameda Research to make more money for Alameda Research, right? The thing is, during a bull market, it's very tempting to take on new projects, to buy tops, right? To put your money out for loans and things like that, put your crypto out for loans and stuff like that, right? The thing is, you may actually encounter an issue with a certain project, and you may call back some of them coins. Guess what? At the wrong place and time when people are asking for their stuff back, and you have things invested other places you can't pull it out, that's how 95 exchanges go down. It happens all the time. It does.
Well, no, great information. Thank you for that, and also, Manny, thank you for joining us today. let me ask you, how can people find you?
Yeah, so I actually have started a new page on Instagram, actually at Mad Blockchain. I'll be interacting with people a lot more. I just got to take the time out to really do it. Of course, at metallism.io. Well, metallism.io is the name of the IG page. We're going to be more interactive on there as well. Right now, social media presence has not been our priority. We've been building an app and building a company and a platform for research. And we're looking to go beta next year. Anybody interested in using the metallism platform or testing it out, being that first round of testers, sign up on metallism.io, use your email address. We'll be notifying people very soon about the availability of the platform and be able to take a look at it and use it. As well, we're going to be working on Keep It Crypto, which is a podcast. We've been kind of sporadic about here and there, but we're going to get more consistent on that as well. So those are the platforms right now that you can probably find us on. Stay tuned. Like I said, be patient. We're still building a product that we want to help educate and help get the space become more healthy, more investment opportunities, and make it more safe for everybody to take a look at their evaluations for research and stuff like that. So that's it, man.
Man, thank you very much. Also, thank you for being a constant friend of the show and joining when things like this happens. A couple of blockchain/crypto friends of the show that we have. We'd like to bring them on when late breaking news happens. It just help us get some additional insights. I really appreciate you joining. Once again, happy birthday to you. Yeah, man. To the guests and the audience, thank you for tuning into another episode of the Tech Behind FinTech. We really appreciate the viewership. Thank you for the DMs, the messages, and also thank you for corresponding with us and so forth. Next, if you're joining from Facebook, LinkedIn, YouTube, Twitch, Instagram, thanks again. Next week we will be off. Next week is day after Thanksgiving. We will be off. We'll be coming back stronger than ever for our, let me just say, our December 2nd show. Let me just get my my dates in line.
Appreciate you, David. Thank you, sir.
Yeah, our next episode will be December 2nd. So November 25th next week, we will be off. But definitely appreciate everyone. Join us back. We're going to be having on December 2nd, we're going to have Renee Small.
Renee, my girl, man. What up, Renee?
Yeah. Renee's peoples. Another friend of the show. We're going to be talking about cybersecurity. It's going to be an interesting discussion. We'll start advertising it shortly. Next, let's post some stuff going on right here. Somebody said, Keep It Crypto podcast with Apple Music. I think that's Rodney.
Yeah, all streaming platforms.
Next,
most definitely.
David Shanks says, happy born day, bro. Definitely happy born day to you.
Appreciate you, David. Thank you, sir. Thank you.
I know from a security standpoint, now we know your birthday, bro.
Yeah, I can't front. I wish I told you in the pre-show to not mention that joint because I don't let people know that joint.
Yeah, I know. My bad. I know we from a security background. I would have, but pardon that.
No, it's all
yeah, moving along. So that's it. Join us back for another episode of Tech Behind FinTech on December 2nd with special guest Renee Small, the cybersecurity super recruiter. Guys, that's it. Cheers.